Hello, welcome to the Entry Point channel. I recorded my last video on Notcoin on August 5th, and it was done even before the moment when the minimum of this entire local downward movement was established on that day. Now that we have established this local minimum at 852, we have received new additional important information that makes some adjustments to the scenario that I described in my previous video on Notcoin. Before I get into the specifics of this, I'd like to briefly refresh your memory of the scenario I described in the previous video. To make this more complete, we will switch from the daily chart to the 4-hour chart. Here it is worth paying attention to the start of trading, namely to the period of this upward impulse. We can see that many traders were attracted within it. This can be seen from the size of the volumes that were for this entire movement. And it can be seen that the largest volumes were traded at the local peak of this upward movement. This local peak looks like a typical buying climax, that is, like a bar with the largest amplitude during of all past time, whose tail of sales is more than half of its amplitude and whose trading volume is the largest. This means that the majority of traders were trading at prices above 2 cents, up to 3 cents. Of course, for this entire volume there were also many longs, that is, purchases. And after this culmination, when we had a downward movement, all this asset was transferred to the accumulation stage by a major player. And the first accumulation already happened on July 5 at the breakout of the level of the 4-hour chart on May 30th, which I have highlighted in red here. You can see all this from the slightly increased volumes, that is, the first accumulation was made in the area of this first green rectangle. Now that we know that Notcoin is in the accumulation stage, the scenario that I described in my previous video seemed logical to us. That is, price crawling down after another phase that attracts buyers. Yes, you see the volumes are also increased. The price crawling down to the next liquidity zone, to the so-called intermediate stop zone, and the liquidation of all these long traders who were accumulated on the downward movement. Namely, on the breakout of the level of the 4-hour chart on May 28th, that is, in the area of the green rectangle of the second one. But this scenario is currently on hold for a while due to what we will now see on the daily chart. On the daily chart on August 5th, when we established local minimum of this entire downward movement, we broke through the daily chart level, which is obvious to all market participants. That is level of the July 5th, which is located at 912. We did this by a very small percentage, 6.58. And in order to accumulate asset properly, we have to break through such levels based on what we see in the altcoin market, at least by 10% and usually by 15, 20, 25%. We can also confirm this logic on Notcoin, in fact, from example that has already existed. When we broke through this level of the 4-hour chart May 30th on July 5, we did this for a fairly large percentage of the breakout. It was roughly, as you can see now, around 17%, and here we broke through the daily level by a little more than 6%. Thus, we did not collect liquidity properly. Although you can see that liquidity was collected, you see there is an increased volume. That is, the second accumulation, we have it after this first one, but it is still not enough. Moreover, not all liquidity has been collected yet, which lies below in our intermediate liquidity zone, and which lies even lower below the absolute minimum level, below the yellow one. Why did they do this to us? If you watched my previous video on loans, you can understand the logic. The situation here is quite similar. If on loans during the descending phase the movement has been driven to the price near to the absolute minimum level, having thus demonstrated the strength of the level and its supposed impenetrability, they did something similar here on NOT, but at the intermediate level of the daily chart. That is, they showed the strength of the level and such. It is later will be used by major player to stimulate retail to purchases during impulse movement. In order to get under this level, later stop order zone and accumulate there thanks to all those longs, which will buy during growth. This is actually the purpose of what he just drew for us. In this way, he is trying to replenish liquidity in the long term below the level that he broke through by 6.5%. He will collect liquidity later in greater quantities. Therefore, understanding all these things now, instead of waiting for the price to slide down, here it is. In this intermediate liquidity zone, that is, in the 5 on 50, 650 zone, we should first see an upward impulse movement. Moreover, this impulse movement should make Notcoin stand out in the market. That is, this means that within the framework of price changes during the day, we must see percentages like 10, 15, 20, 25. In the list of quotes on the exchanges, such an asset attracts attention as one of the top gainers. Accordingly, in the relatively near future, perhaps within a few days or weeks, we should see such impulse movements. They will stimulate small players to buy, and liquidity will be replenished below the level of August 5 and also below the level of July 5. And if, by the way, we set aside at least 10% from the level of July 5, we will see that this already brings us closer to the level of May 28. If we take the same percentage that we received here in the first near zone where the first accumulation was, that is, we bring it to 17%, we will see that we are already breaking through this red level. And it would be logical to reach our intermediate liquidity zone, making a breakthrough in the region of 27-28%. This will bring the price to around 650. But all this, unlike the scenario that I talked about in the last video, will now be logically done through this ascending phase. Thus, now our immediate prospects look like the price will come maximum, I think, up to the mark of this yellow level, which originates from the peak of July 20th and is equal to approximately 1800. After all this movement, we will develop the downward phase exactly to those price values that I just indicated on the 4-hour chart. That is, we will have to break through the minimum on August 5th and July 5 by 15, 20, 25%. That is, in theory, lead us to our intermediate liquidity zone, and there may be a rebound from it in the future, or they may break through immediately. We will talk about this in more detail once the price gets there, what reactions there will be, and so on. But for now, we should see the upward phase and then a reversal, and we shouldn't break through this level, an obvious gain for many market participants, because all those longs that will appear here within the framework of this upward movement must not exit. And accordingly, for them, the first obvious target, of course, will be a breakout of this yellow level. They will not be allowed to exit in order to preserve this liquidity zone in the form of their stops and liquidations so that it is replenished. Well, plus the retail opening shorts is also not profitable for a large player, and the breakout of this level should not happen in theory, and it will need to be fixed before this yellow level in case you now want to gain a long position. In principle, this will look quite logical because you are quite close to the value of a 10% breakout of our level. Our 10% breakout will be approximately 818 to 1820. So that means stop order somewhere in the region of 25%. The growth potential is possible somewhere around 60-70%, and if I'm not mistaken, let's see, well, yes, about 60%. This trade doesn't look very good in principle because the target to stop ratio is less than 3 to 1, which is the minimum recommended to maintain. If you take a long, you need to wait for some kind of rollback in the region of 1 cent, so that your stop order is at least 15%. Then you get a 4 to 1 trade ratio. It could potentially be worked out. If you trade on the BingX exchange, you can immediately reverse position and go short when fixing your long position and work out this entire downward phase up to the 5 to 56 or 50 marks. If you are not registered on the BingX exchange yet, then go to the description of the video. There is my affiliate link, by registering with which you will receive bonus in the form of a rebate on commissions. It is also worth saying that potentially, of course, this upward movement may not be brought so high. They may limit it to an intermediate option of bringing it to the level of July 27th. Well, again, when we get to this point, I will release another video, and there we will analyze in more detail what the reaction will be from this level and what to do with the position if someone has it. Also, of course, you can do nothing but just wait for these price values within the intermediate zone, which I have already indicated for long-term purchase in the region of 550, 650. Here it's a matter of preference. If you want to receive information from me on other trades in the format of entry point, fixation target, stop order with full support, with a full description of the logic of opening a trade, that is, with a full analysis with full logic both in text and graphic format, then you can go to the description of this video. There you will see a link to subscribe via the CryptoBot to my private commercial Telegram channel. The cost is $150 per month. If you want to get to know the essence of this channel in more detail, you can also read about it all by clicking to the link in the description, which will introduce you to the essence of the channel in more detail. Thank you very much for your attention. If you found the review interesting and useful, please comment, like, and subscribe to the YouTube channel. See you in the next issues. Bye, everyone.